we know the major mining companies need to replace the 90 million ounces they're producing every year, and they're not doing that. So if we can identify that discovery early on, that's sort of our exit strategy.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. We are still at the New Orleans Investment Conference. Excited to be joined by Brent Cook, Exploration Insights. One of the top analysts out there, comes to a lot of these conferences, digs into the companies. So for folks like me who have precious metals addiction, there's guys that actually are looking into the individual names. And Brent, great to have you here.
Thanks. I guess I've got a rock addiction.
A what?
A rock addiction.
Yeah, well, it's one of those things where it's darn grateful that we have folks like you out there, and curious, just any general thoughts as we kick it off of what you've been digging into at the conference and what you're looking at these days.
Sure. I think in general, this is probably the most positive I've personally been on precious metals going forward since, probably year 2000.
Right.
And all the speakers here, the ones that really know the big macroeconomic scene and that sort of thing, that they're making a lot of sense as well. So big picture, I think precious metals is the place to be. What I'm doing and what Joan's doing is we're digging down into as many early stage projects as we can find, with the idea being that we know the major mining companies need to replace the 90 million ounces they're producing every year, and they're not doing that. So if we can identify that discovery early on, that's sort of our exit strategy.
Yeah, and I appreciate that, because obviously when you have gold and silver prices rising, which certainly there's a lot to suggest that that's on the way. In fact, I was reviewing our chat from last year when interest rates were rising. Now we're in negative interest rate territory, many areas of the globe. So certainly a lot to suggest that, but I like what you do where even in you don't have to count on the price of the metals going up if you find good projects.
Exactly. That's kind of our thesis, Joe and I, is that we know we both work for major mining companies. We know how they operate, and they need to replace what they're mining. I mean, I think I pointed out yesterday in my presentation is that we're burning through one Carlin trend every year. That's 90 million ounces of production every year. We're not finding that many ounces. Likewise with copper, we're burning through one Bingham copper mine every year. We're not finding that every year either. So looking out there, that's what the majors are facing. And it takes to discover, develop, permit, and put in production a new mine is 10 to 20 years.
Yeah. And it's interesting you mentioned copper, because I hear that's another one where we have some sort of structural deficit. And I wonder how this plays out, where we have commodities. I don't know if it's ever been like this before, but for things that we need and use as a human race, and we have these deficits, and you can't flip the switch and turn that on. So how does that play out over time?
Well, I don't see that happening for the base metals, in the near future. But it played out just recently with China from, say, 2001 through 2000 and what would get to 2014, 15. Right. Anyway, that major bull market run in metals was due to a shortage supply as China was ramping up and developing. That's how it's going to play out again.
Yeah, it's actually perhaps playing out in some degree in the palladium market, where we've seen prices, have we passed the doubling point yet in the last year? I think
so, yeah.
I think it's almost over $1,800 an ounce now. And
yeah, I don't understand what's happening there, so I can't comment. And likewise, there are so few real fresh platinum group metal deposits out there, and most of them are located in places you don't want to be, or they're held by major mining companies. So I don't really understand what's driving the palladium price per se,
right.
And I don't know how to play it either.
Yeah. Although one of the things from palladium and platinum that does extend to the other metals, we hear South Africa politically not always the easiest place to get things done, and curious how you factor that in, where different regions affect the investment as well. You know, want to be careful if the government comes in and says we're taking the metal. How does that go into the analysis?
I think that's probably a key point. It's not number one. Number one for us is, size and grade,
Right.
and economics. But number two is probably the social, political environment. There's places you just, we won't go. I don't care how good the deposit is.
Right.
There's other areas where it's a little risk reward. Like we have been involved in mines or projects in Burkina Faso, but we've pulled out of there. Likewise, Colombia, we've sold all our stuff out of there. Bolivia is actually looking a bit better. We might be looking at things down there. So it varies, but that's certainly important. And then it even comes down to the county or province you're in. Like there are certain places in Argentina that are really good for exploration and mining, and others you'll never get anything done. Yep. So you have to know, you got to get right down to the local level.
Yeah. Certainly a fascinating environment in Argentina where I wonder if one day the dollar is experiencing something similar to their currency. The one thing I thought would be fun to update on this year, obviously the metals price is finally a little bit higher than last year when we talked. And how does that change your analysis when the price moves? Does that lead you to look at different projects?
Not a lot. What I've found is that most of these marginal or uneconomic deposits, there's a fundamental reason that they don't work. And with an increasing metals price, I would say the majority of those still are not going to make money. And again, our focus is on finding something that a major mining company is going to buy because it's really economic and adds to their cash flow. You look at someone like Kirkland Lake, who've got a fantastic deposit, very high grade, making lots of money. If they have to be very careful what they buy if they're going to expand, because you don't want to buy something that's going to bring down your profitability overall. So it's interesting that way.
Yeah, although hopefully a little bit easier for some of the margins of some of these businesses. And what's the financing environment been like for these companies? Is that getting any easier, or?
Surprisingly, it's not getting easier. I mean, the junior explorers, some of them that are well structured and have respected management and connections, promotional ability, they're raising money. Right. But you look at the developers, and they're having a really hard time. There's just not money out there for projects that are have resources and a pre-feasibility or something on them. The money's not there in the hundreds of millions to even more of dollars that's needed for the capex. So they're kind of flatlining. Right. It's difficult. It's really difficult.
Yep. Well, which again is one of the reasons why you may want to check out Exploration Insights.
I think that's a good idea.
With Brent and Joe Mazumdar, who I had the pleasure of talking with, I believe it was last fall. And perhaps in wrapping up, maybe you could share something that for folks, whether they're new or even experienced in the space, is there something that you see people should be looking at, but that when they're evaluating projects, they often overlook that is something they might be well served to consider?
Well, I think in terms of the technical aspects, and I'm assuming that most people listening to this aren't mining engineers and exploration geologists. Still, a company's website tells you a lot about it. If the data presented is complete, if there's geologic cross sections and full tables of assays and everything is there, it tells you at least they're giving you all the information and they're honest and such. So I think that's really important. If someone's not giving you all the information, or it's a sloppy website, that tells you a lot about the company and the people running it. So you don't have to be an expert to understand that.
I think that's a great point, because it's just, someone who's been doing this for a while and understands and takes the time to say, all right, we realize people are going to be watching the things we're doing and presenting it. And, one of the things I look at more than the numbers these days is just listening to the guy running the company speak. Does it
Hmm.
sound like it's in line with what I'm looking for? Does it sound like it's with integrity? Obviously, we saw Enron. The numbers were great, but the numbers weren't real. So perhaps just in closing, you let folks know a little bit more about the site and what you guys offer and how they can
Sure.
find you.
Well, there's two of us, Joe Mazumder and myself. Joe is actually running the letter now, doing most of the work. I'm sort of 20-25% partner in this in terms of the work I do, but we work together all the time. The newsletter is Exploration Insights, website's explorationinsights.com. We publish once a week, and the letter is basically about what we're doing in this sector with our money. We don't get paid to promote anybody, et cetera, et cetera. And so we make money either on our investments and with subscriptions. And it's a technical letter, but I think it's a pretty good letter. So, and there's lots of good information for free on there, explorationinsights.com.
Yeah, and that's always certainly a good sign when you see someone's putting some skin in the game and that you're following your own advice. And for folks that aren't geologists but want to be invested in the sector, explorationinsights.com. Brent, thanks so much for joining me.
A pleasure, always a
catching
pleasure.
up soon. Great to see you here again
Thanks.
this year.